Well, this is a way to start off the month, I guess. September 1st, futures are down this morning on the first day of the trading month. Stocks finishing in the red yesterday, down more than 4%. It was a very volatile month of August. Cleveland Federal Reserve President Loretta Mester saying yesterday that she sees interest rates topping 4%. And no cuts in the interest rate until at least 2024. Joining me now, ProChain Capital President David Tawil. David, the market had a rough month. I think the big question right now is, are we seeing a double bottom now, or is there more trouble ahead, in your opinion?
I think we'll rally in September when everybody comes back to the office. I think we've had pretty low volume end of August. Had some bad comments or, negative comments from the Fed relative to what people were thinking. And so therefore, we've had a very rough month relative to the good sentiment that we had in July.
And Mark Tepper, the bond market, you were telling me in the commercial break, might be telling us a completely different story than what the stock market is telling us.
Yes, so the 210 curve is inverted by, I think, around 30 basis points. I don't have it in front of me right now. So that is signaling that there is trouble ahead, whereas the stock market, as we all know, from mid-June until mid-August, kind of brushed everything off, brushed off the comments from the Fed and decided it was going to rally in spite of everything that's happening. But, Cheryl, you mentioned Loretta Mester. The day before that, I think it was John Williams of the New York Fed said that we need to get to positive real rates, which means that the Fed funds rate has to exceed the inflation rate. So we have a long way to go. So, David, my question to you is, how has the stock market ignored the Fed's hawkish tone, and how has the stock market gotten this so wrong from mid-June until mid-August?
So I do think that certainly there were folks that got it wrong in the sense that they expected cuts to come way sooner than I think reality dictates and sensibility dictates. That's one thing. I think that, however, the other thing is that we seem to continue to have a resilient economy in the face of, and when I say resilient economy, I mean things like unemployment, let's say, and also even wage growth in the face of, those rising rates that we're expecting, to go ahead and come.
All right, David, I want to move on to oil with you, because if you look at the contract for August, WTI, down 9.2% for the month. For the contract, worst month since November, but frankly, nice for the rest of us that are driving vehicles and paying $100 to fill up our tank. But all of this is on the slowdown concerns. As far as oil, and in particular what we expect from OPEC, which is frankly that we're thinking going to be boosting output, where do you think that oil prices go?
So I think the market's got that wrong right now as well. I mean, it's reacting, obviously, the price of oil is reacting to the sentiment broadly in the market regarding a recession and not the, great happiness that we had in July regarding the expectation of the economy coming out of, a very shallow recession very quickly. And I think that that's wrong because, frankly, we're starting to see things, I'd say generally open up. I know that there's still concern around what's going on in China in terms of lockdowns, but frankly, I think that that's a temporary and a short-term thing. And I don't think that the production is coming up all that fast, and inventories are incredibly low. And so I believe, and I've said this on the show before, I think we hang around $100 a barrel, plus or minus $10. For a long period of time. And so at the current prices, I think it's worthwhile, investing in oil futures and watching them rise over some time.
Well, we're at 87 and change right now. So if you're correct, that means we can make a little money on the upside. Real quick, you've got a couple of picks here. I know you're shorting Bed Bath & Beyond. Yesterday was a rough day for that stock, but you like Amazon, and that's the consumer story for you. Explain.
So I think consumer has been generally strong. I mean, we had the beginning of earnings season. There was a lot of concern around the consumer. First couple of reports that we got were about folks taking down their expectations of sales for the upcoming quarters and through the end of the year. But it seemed that in Q2, the consumer was not as weak as we might have thought, especially from the last set of reporting companies that we saw in the quarter. And so therefore, I think, discretionary certainly is an area to be concerned about. And that's not where Amazon necessarily makes its money. I think that it's going to have a strong, fall back to school season. I think that their, AWS business, along with the data center business, is going to become incredibly strong as one of the very few gigantic players in that business.
Yeah, we talk about Amazon so much, David, because it's such a big part of our lives, especially during the pandemic. But to your point, we got to run. It's web services, and that's where they make their cash. And certainly that's what investors focus on when the earnings come out. We're going to leave it there. David Tawil, thank you very much, sir.